All right, everyone, welcome back to Invest the Rest, my new YouTube channel that covers the progress and any weekly updates of 3 new investment accounts that I started at the beginning of 2025, all focused on different financial strategies. Today, what we're going to cover is the high yield dividend ETF focused account, where all of the funds and holdings in this portfolio are focused on a monthly cash flow that is mostly passive in nature. We're invested in a bunch of ETFs that trade option contracts to produce a monthly income for the shareholders. All of the accounts were started at the beginning of 2025 with $10,000. And as you can see on the screen, this account, and particularly at the end of this past week, right on Friday at market close, we are at 8.01% total return on that initial $10,000 investment. Now, before I jump into the updates of last week and the details of this account year to date, this is not financial advice, and I am obviously not a financial advisor. I've learned these investment strategies over many years of experimentation with my own money, learning as I go, and making sure I'm conservative enough to learn and not lose too much money as I make mistakes. Therefore, all of my videos are for entertainment purposes only. However, if you find anything informational or entertaining, or you want to know more, you have a question, drop a comment down below. I answer all comments, respond to all the comments in my video, and throw me a like if you found this information valuable. So, quite a few updates for this account from last week. If we scroll down to the dividend table for February, we have 5 funds that did announce and pay the dividend, their monthly dividend last week. So we have MSTY, SQY, AMZY, SMCY, and QDTE. QDTE being that recent addition to the portfolio that was bought with January's dividend payments. Again, we're trying to create that snowball effect. So all dividends from the previous month will be reinvested to expand the position of existing funds or find new funds to add to the portfolio for the following month. So dividends will be earning dividends on dividends, right? So let's go through the payments real quick. MSTY, we own 40 shares. Another great dividend payment from MSTY. Honestly, MSTY is my favorite fund in this portfolio for its high-paying, consistent dividend payments. $2.02 per share. We have 40 shares in this account, giving us a total of $80.86 for the month of February. SQY, 55 shares, a very respectable 58 cents per share, giving us $32.12 added to the portfolio. AMZY, again, owning 55 shares, again, right near that 50-cent mark. 55 cents rounding up per share gives us a total of $30.14 per share. Per share added to the portfolio. Excuse me. SMCY, we own 35 shares of SMCY in this account. Again, a very respectable dividend payment, $2.09 per share, giving us a total of $73, excuse me, and 15 cents per share. Guys, please pardon my voice. I am getting over a little bit of a cold, so you may hear me clear my throat, but we will definitely get through all of the updates for this account. QDTE, right, paying weekly. So we have to keep that in mind when we're evaluating the weekly pay, right? Their dividend payment announcement isn't going to be as high as the others. But if you look at the previous one, on 2/7, it was 23 cents per share. We still own 13 shares. This week they announced a 25-cent per share, giving us a total of $3.26. Now, QDTE month to date is right up near that 50-cent mark. If they have a similar performance for the payment on 2/21 and on 2/28, QDTE will have a very respectable dollar payment per month per share, right? But they've decided to pay it out weekly instead of monthly. That's the only weekly paying fund that I currently have in this portfolio. All other funds pay on a 4-week rotation or a monthly rotation. All 5 of these announcements were paid on 2/14, and that money went directly into this account. So month to date, in the month of February, up to $301.06, with almost half the portfolio left to announce in the remainder of the month. Scrolling back up here to the table, we can see, like I mentioned in the beginning, 8.01% through really a month and a half of 2025. Very respectable ROI on the initial $10,000 investment. We've invested $10,504 to date. That includes the dividends that were reinvested after the month of January. And we've experienced a hypothetical, if we were to liquidate the account today, a $33.62 loss in capital losses. Okay. Now, again, this is hypothetical. I do keep track of it so that I know where my account stands on any given day if I were to liquidate it that day. So as you can see, based on where we bought, it's been a very tumultuous beginning of the year. The market's been up, the market's been down. I think overall, on average, most funds, most stocks are trending in the downward direction. So most of these funds, because they do have a high exposure to the downside, are losing money based on the share price, right? If you look here, SQY, we've currently lost $116. We bought for $18.47 per share. SQY is currently at $16.36 per share. However, we've also earned $66.98 in dividends. So that takes away some of those losses. The return total, we're down 4.83%. Okay, some of these funds are down. And at the end of February, I will put out a video. We're going to use February's dividends to expand the positions on some of these funds to lower our average cost basis, right? We're going to buy more shares of the funds that are currently at a price that's below our cost basis. This will lower our cost basis and improve our chances of seeing a capital gain for that fund in the future. I always highly recommend lowering your average cost basis whenever possible. If I look at MSTY, which, is one of my favorite consistently high dividend paying ETFs in this portfolio. Yes, the current price is at $25.43, and the cost basis that we bought at was $27.44. So that might be another good candidate to buy additional shares and lower that average cost basis. In the scenario of MSTY, we've lost $80.40 on the price of the fund. However, we've earned a whopping $172.30. So that far outpaces and more than doubles the capital loss. And so this fund is up 8.35%. What I will not be doing is buying more shares of these three down here: SMCY, PLTY, and QDTE. And the reason I won't be buying more of those, at least in the short term, is because their current price is above the price that I bought at or above my average cost basis. I don't want to buy a fund unless I'm lowering my average cost basis. I think that's an important aspect of high yield dividend investing strategies. We're going to let these continue to earn dividends, continue to earn capital gains until they do see a capital loss, and then we'll take that opportunity to lower our average costs for the funds. As you can see, diversity is important. Why is diversity in a portfolio important? I go over this in almost every one of my dividend account update videos. Yeah, if you picked SMCY and PLTY and put $10,000 in those two funds alone, we would be up quite a bit more. However, it's anybody's guess about what funds are going to go up the most, and nobody is a professional or consistently proficient at timing the market. So if we only pick two funds, we may have picked NVDY and SQY for our entire $10,000 investment, and we would be down about an average of 3.5%. So keeping a lot of funds and keeping that diversity high gives us, yes, we're going to experience some losses, right? We have 4 funds that are currently negative ROI, but we're also going to be able to capture some of those really high top performers, okay? And by doing that, our average return of all of the funds in this portfolio is going to be very respectable, 8.01%, right? Because we have a strategy that controls the risk on the downside. We have 4 funds that are down, but they're not down by that much. And then we're really unlimited on the upside, in my opinion, where we can capture most of the growth and we can capture those high dividends, those funds that pay that consistently high dividend, right? If we go back down to the dividend table down here, SMCY $2.09, MSTY $2.02. So those funds that are seeing that, growth or reduced capital loss are paying some of the highest dividends, especially SMCY. If we look at PLTY, that has increased astronomically. We only own 15 shares of it. We bought at $68.23. The current price is $91.95. We've seen a staggering $355.79 in capital gains. Now, that's if we sold today. Tomorrow, when the market opens Tuesday, because it's a short trading week this week, this could all change, right? And that is the volatility, that is the risk of this investment strategy. So PLTY, if I come down here, PLTY in February does not pay or does not announce their dividend payment for February until the 26th, which will pay into my account on the 28th. But I am excited to see what PLTY pays. They've seen incredible appreciation in their share price, which for the underlying option strategy of the PLTY fund is a positive indicator. So the dividend this month should be pretty good. One thing I didn't go over down on the dividend table, if we look at MSTY from January, they paid $2.27. This month they paid $2.02. SQY paid 63 cents. SQY in February, 58 cents. AMZY, 40 cents in January, and they raised it a little bit to 54 cents or 55 cents in February. SMCY, $1.72. SMCY in February, $2.09. QDTE, we don't have data from January, but we can look at we can look at December. And they're very consistently paying somewhere between $16, wouldn't that be nice? 16 cents and 23 cents. We look at the later payments, they got a little bit higher, which you can expect towards the end of the year. I don't expect an 80 or 86 cent payment per share from QDTE on a consistent basis. I expect it to be far closer to the 16 or 25 cent mark. So, MSTY, SQY a little bit lower, AMZY, SMCY a little bit higher. I think right now through February, we're on track to be very close to our January totals. Hopefully we're a little bit higher and we can continue to make progress on that December total goal of $675.95. So we still have that 77% ROI projection. Again, that is a hypothetical projection based on December 2024 performance. And we're continuing to keep sight of a balanced portfolio. QDTE could use a little bit more, right? Maybe we'll buy a few more shares if the opportunity presents itself. So we'll probably look at expanding our position in QDTE and then expanding our position for anything that is in the negative. And that would be in preparation once all dividends are paid in February, using those dividends to prepare for our strategy through March. So very little loss, $33.62, $834.89 in dividends paid year to date, and that wonderful 8.01% return through a month and a half of the 2025 year. We have a long way to go, and I hope this performance continues in the upward direction. As always, everyone, I appreciate you watching. If you found any of this beneficial, or maybe you just find it entertaining, you want to keep up on the updates week to week, subscribe to the channel. I have playlists put together for the 3 different accounts. If you're only interested in one type of account, you can just watch that playlist. And when you're subscribed, you'll be notified of new videos when they're released. And again, like I always say at the end of my videos, I very much appreciate everybody watching, and I will catch you on the next one.